Today, we're diving into a really interesting and deeply bullish investment thesis from MicroStrategy, ticker MSTR. And it really presents a paradox. It looks like the company is absolutely nailing its strategy, but its stock price, well, that's telling a completely different story. So we're going to break down why, all according to one recent market analysis. All right, so let's start with the central puzzle at the heart of this whole thing. It's a real head-scratcher for anyone watching this company. So on one hand, you've got this. The stock price is down a whopping 47% year to date. But on the other hand, the company is right on the edge of hitting its super aggressive 25% Bitcoin yield target. You've got performance and price just moving in completely opposite directions. And that, of course, leads to the big question this analysis tries to answer. What is going on here? Why this massive disconnect? If the company is doing its job so well, why is the market punishing the stock like this? Well, the source argues it all starts with their actual performance. So the first big piece of this bull case is how the company has just successfully executed its core strategy around its Bitcoin yield. According to the analysis, by mid-December, MicroStrategy had already hit a Bitcoin yield of 24.9% for the year. I mean, that is just razor-thin close to their stated goal. And the thinking here is that just one final Bitcoin purchase before the end of the year is going to be enough to push them right over that 25% guidance. Now, numerically, that's a tiny little step, right? But strategically, it's a huge milestone. And what makes hitting that 25% so important isn't just the number itself. The source really hammers this point home. This guidance was revised upwards 3 separate times during the year. So to actually achieve that in what the analyst calls the nastiest fair market you can imagine, well, that's framed as a massive accomplishment. Okay, so if the company is hitting its goals, what gives with the stock price? And that brings us to the next key theme from the source. This argument that MicroStrategy is fundamentally undervalued based on what it actually owns. Now, to get this valuation case, you gotta understand this key metric the source uses, MNAV. It stands for market value to net asset value. But in simple terms, just think of it as a way to see if a company's stock is trading for more or less than the actual value of all the stuff it holds. It's really similar to the price-to-book ratio you'd use for a bank. And here is where that valuation argument really starts to click. The source points out that MSTR's MNAV is currently sitting at just 1.07. They compare that to what they call a good bank, another company you'd value by its assets, which they say usually trades at a price-to-book of 1.6 to 1.8. So the core argument here is that there's this huge valuation gap. And the source? Well, they don't mince words about it. The analyst's opinion is that a 1.07 MNAV is, and I'm quoting here, way too cheap. They argue the reason for this super low valuation isn't a problem with MicroStrategy itself, but it's really just a reflection of how incredibly bearish the market is on crypto in general. And that, leads us perfectly into the third big pillar of this analysis, the role that market psychology, and specifically just plain old fear, is playing in driving down the price. For evidence, the source points right to the Crypto Fear and Greed Index. At the time they were looking at this, the index was at 29, which is squarely in the extreme fear zone. The source argues this index tracks the price of Bitcoin with almost uncanny accuracy, which suggests that sentiment, not fundamentals, is what's really in the driver's seat right now. So what do you do with all that fear? Well, this is where the analysis connects everything to that classic investment philosophy you've probably heard a million times, often from guys like Warren Buffett and Charlie Munger: buy when others are fearful. From this perspective, all this fear in the market isn't a reason to run for the hills. It's potentially a signal of a major opportunity. So if fear is the problem, what could possibly be the solution? The final part of this analysis looks ahead to the start of the new year and some potential catalysts that could completely change this whole dynamic. The analysis lays out this really interesting sequence of 4 potential game changers. First, the end of tax loss selling, which gets rid of a lot of artificial selling pressure. Second, after that 30-day wash sale window closes, all those sellers can jump back in. Third, a potential government shutdown, which the source notes has actually been bullish for Bitcoin in the past. And then fourth, the big one, the continued arrival of institutional money. And that arrival of institutions point is a really key part of the thesis. The whole idea is that more stable, institutional money is going to come in and replace the retail investors who sold out of fear. The source even points to examples like registered investment advisor firms that are now actively telling their clients to allocate to Bitcoin, some as high as 4%. And that really brings us to the core tension of this entire bullish case. After you break down the performance, the valuation, the market psychology, It all boils down to this one provocative question. Does all this extreme fear in the market represent a fundamental warning sign to stay away? Or is it the very window of opportunity that this entire thesis is built on?